This show is brought to you by Asino Resources.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. Today is 8/14/19. Well, been watching these markets. The Dow is getting slammed again. Another day, another decline. It's down. Last time I looked, around 600 rather. Now it's come back a little bit. It's only down 585. Gold up 16.50 the ounce to 15.17 and change. Silver higher advance up 29 cents the ounce. 17.21 on the bid. What to make of that? What to make of a lot of other things? Well, what you should be making of it is you need to be on our mailing list. You need to go to financialsurvivalnetwork.com, put in your name. You'll get the reports. You'll be on the list for all of our latest newsletters, one of which we just sent out moments ago, or just write us, kl@kerrylutz.com. Well, in life, anything you want to do, there is a proper way to do it, a proper way to learn how to do it, a powerful way to do it, where your efforts, your drive, and your ambition will be maximized. And that really is the key. Rather than jumping off in all different directions, trying to accomplish something that is, in fact, doable, you dissipate your energy trying to do it. Well, if you know the right rules and you know the right system, then anything is possible. And we've got somebody back on with us, author, website, Joel Salomon. You find him at joelsalomon.com. That's SALOMON.com. Author, new book coming out, 9 Money Rules Millionaires Use. And Joel, it's great to have you back on. So book is coming out. What's the motivation for writing this?
Kerry, first of all, thanks so much for having me back. And so the impetus for the book was really some criticism I got from my first book, Mindful Money Management, when people told me they were hoping to read a book about processes of how to be mindful around money management and how to become financially free. And that criticism launched me into writing this book, which is a book about processes, about rules. Although, as I say in chapter 1, I'm not a rules guy. So if you want to throw out 8 of the 9 rules, go ahead. But I have a few rules that I believe that millionaires use to become financially free, to become millionaires and more than millionaires. And that's why I wrote the book, to teach people what those rules are.
So what is the first and most important rule without which following you cannot succeed?
The first rule is when you believe. And I talk a little bit about this in Mindful Money Management, but didn't really say it was a rule, but it's critical. In any investment, I have my clients write down their level of belief from 1 to 10, where 1 is massive doubt and 10 is absolute faith and knowing you're going to make money. Mm-hmm. And I tell my clients, if you're not a 7, 8, 9, or 10, don't go there. Because what's going to happen is if you have massive doubt, you're going to be making wrong decisions. The stock goes down 20% and nothing's changed in your thesis except the macro environment. You're going to be selling when you should be buying more. And similarly, if the stock goes up 20%, you might be selling when nothing's changed except the value of the stock. So when you have high belief and high faith in your investments, it changes the way you look at things and you will make money. So that's the starting point of every investment. And in life, I believe if you have strong belief, you will create lucrative opportunities every chance you get.
Mm-hmm. So it all starts with a belief, an idea, a hope, a desire, a wish, right? Those are all different forms of thought effectively. So obviously before you can do anything, you got to know what you want to do. You got to believe you can do it. Then what?
Well, that's the first, and there's many other rules that go along with that. I'll give you a couple of controversial rules that I will tell you a large percentage of advisors and planners, and just to be clear, for those who listened to me being on your show a number of months ago, I am a prosperity coach. I teach people how to become financially free so they don't have to work if they don't want to. I don't sell insurance or annuities or stocks or bonds or mutual funds. I just teach. And of course, I write some books as well. Mm-hmm. And so the last two rules, I think, will be the most controversial and may stir up a lot of controversy. The last rule is don't diversify. And it is a rule that I will tell you every financial planner advisor will scream at me for. But I'll quote Charlie Munger, you may know as chairman of Berkshire Hathaway, Warren Buffett's right-hand man, whose net worth is about $2 billion these days. He said, the whole secret of successful investing is non-diversification. If you know nothing, diversify. Mm-hmm. And I have a whole chapter on why you shouldn't diversify. And my basic thesis is that you're coming from a point of view of fear. When you have high conviction and high belief in a few ideas, and I will tell you as a hedge fund manager managing almost $700 million at the peak, that my top 5 to 10 ideas generated more than 100% of the return for my fund. And the others were reducing the overall return of my fund. Mm-hmm. And that's what diversification generally does, is it will reduce the overall return of the fund when you're putting investments into ideas that are not as high conviction as the others. In fact, Harry Markowitz, who is the father of modern portfolio theory, said that an investor who seeks only to maximize their expected return would never prefer a diversified portfolio.
But what about risk, though? I mean, I know there's belief, but there's also things that happen in life. You could be invested in the next rising star. You really believe it 100%, and then an existential event occurs, and that stock is wiped out. I've seen it happen. You've seen it happen, right?
FSN Radio. It's all about what's next.
Be sure to take a look at Ross Beatty-backed Osino Resources, a gold explorer in mining-friendly Namibia. Osino's district-scale land package is near 2 producing gold mines. Osino's management team previously developed and sold one of them to B2 Gold. Its founders and management are experienced mining professionals. In the past 7 years, they successfully developed and sold 2 companies. Osino's excellent shareholder base includes Ross Beatty, owning 20%, insiders at 5%, and resource capital funds with 8%. Drills are turning, exploration is ongoing, so you'll definitely want to pay attention to Osino. It trades in New York under the ticker symbol OSILF and in Toronto under the ticker OSI. Find out more, go to OsinoResources.com. That's OsinoResources.com.
The Financial Survival Network. It's all about what's next.
So I guess my view is that by putting your money into other investments, you're more likely to have that happen than with your highest conviction ideas, your highest belief ideas. And so that existential event will happen to the stocks or the other investments, be it real estate or be it bonds or other commodities that you haven't done your research on. And you're more likely to have that happen if you have 100 stocks or 100 different investments than if you have 5.
Mm-hmm. So you can watch them closer, right? So
right, and you can be on top of them, and you can be prepared and have mindfulness around your investments so that you have a plan for when something unexpected happens. So I'm not saying that you shouldn't cut your losses if something changes, but what I'm saying is by having 50, 100, many hundreds of investments, you're not going to have as good a return.
Mm-hmm. Yes. Yeah, because it'll tend to emulate the market as a whole at large, right? And that isn't the way that you get the best returns, obviously.
And that's not the way you become financially free. The smartest investors in the world, the best business managers in the world, from Jeff Bezos to Steve Jobs, did not put their money into hundreds of other businesses. They concentrated and managed their business to the greatest return possible. And I didn't mention Warren Buffett. I did mention Charlie Munger, but Warren Buffett said that there are situations where it'd be a mistake not to invest 50% of your net worth in one business.
Mm-hmm. And there's some truth to that. Look at what he's done with companies like Geico, right?
Yeah.
And others. I mean, there's so many of them. Let's face it. Really, it just keeps going on and on here. But on the other hand, there are those things that happen that you're not expecting, and it can happen in your own business, and it can happen in businesses you invest in, right?
Absolutely. And again, I just think it's more likely to happen when you're not on top of your few high conviction, high belief ideas. And so that's why rule number 9 is don't diversify.
Yeah. So don't diversify. And I remember Peter Lynch in his book, what was it, A Walk on Wall Street or something?
One Up on Wall Street. I quote Peter Lynch as well.
Yeah. He called it
Diversification.
He called it Diversify. Because when companies do it, that's what happens. It turns out to be the worst thing for them. So there's definitely something to be said for it. Maybe there's a balance. Maybe it's 5 stocks that you need to own. I don't know the answer, but I do know.
Yeah, I actually quote Peter Lynch in my book. He said in small portfolios, which that's what my book's about for people who have small portfolios. Peter said, I'd be comfortable owning between 3 and 10 stocks.
Mm-hmm. Interesting.
And as you know, Peter Lynch started Fidelity Magellan. He grew it from $20 million to $14 billion. That's a big $1 billion.
And that was when a billion used to be a billion, right? Used to mean something. Hey, so how long is the book? How long is it going to take you to read it?
Oh, it's a very short read. It's less than 200 pages. And I've had a few people read it in just a few days. If you're a slow reader, it might take you a few weeks. But there are critical items in this book that will get you to financial freedom quicker. There are key rules, and this may be another controversial rule, but 80% of millionaires budget. And if you're not budgeting, if you don't know where your cash is going, I'm pretty sure you're not going to be a millionaire. So that's rule number 7.
A budget, huh? And what about live beneath your means?
Yeah, that's part of that chapter. I actually have a budget game that I go through in that chapter on how to shift your energy around money. For those of you, I mean, there's $14 trillion of credit card debt in the U.S. A lot of people have come to me where their net worth is negative because of their credit card debt. And we go through a game that we play to shift their energy around money, to get them to feel more enjoyable, more positive. And when you start doing that, things change dramatically.
Yeah, no doubt. Hey, well, so let's see here. When we're looking at these techniques, at these rules that we're talking about here, what about the external world? That has some impact, Joel, on what you're doing with your life, your income, your ability to make income. So how much weight do you give to the world at large?
It's a great question, Kerry, and I'm going to be controversial again here and say very little. I know personally I made a lot of money in 2008. I made even more in 2009. People make money when it may seem like the economy is slow and people may not make money when the economy is booming. I was talking to a potential client just a couple of weeks ago who was lamenting how over the last 10 years, he hasn't grown his net worth much at all. And you would say, well, how is that possible? The economy's been booming or at least growing, not booming, but growing for 10 years. And the stock market has appreciated dramatically. So how does that happen? And how can you make money when we go into a deep recession? And I say that there's lucrative opportunities every day. Stocks will go up and down. I used to track, my forte is stock investing. I know yours is commodities, others is real estate. I have a chapter on real estate in my book as well. But I used to track every month the top 10 financial stocks. And I'm
sure
more adept at insurance and financial companies than any others, being an actuary and credit analyst.
Yeah,
but I tracked those financial stocks, and the top 20 every month on average would go up 20%. And it didn't matter if we were September of 2008 when the average financial stock was down 30%. There were stocks that were up 20% that month. And so every month there's opportunities, and every year there's opportunities if you can find those gems. And similarly, there are stocks that will go down more than 20% every year. And even in a good year, like 2013, there were many stocks that went down well more than 20%. And if you found those and you were managing a long-short equity fund like I was, you would make money on both the upside and downside. So my view is you can create your life by looking for great opportunities in all types of markets, in all types of asset classes. And when you do that, the sky's the limit.
All right. I want to share with you a lesson that I've learned from the past 8 years of the resource recession, if you will, gold and silver in particular. Really, these metals have been kind of in the dumps. Now, the fundamental case for gold, probably never better. Higher government spending, more inflation in terms of creating currency units out of thin air, banking uncertainty, global economic uncertainty. And the fundamental case was always great. But the technical case, which deals with sentiment, it deals with emotions, probably was never worse, or was definitely at a low. And you know what? The technical case far eclipsed the fundamental case. And I found what I learned is that in all markets, that is the case, but very difficult to be a successful market timer. So you've got to follow the trend, but first you got to find the trend. So obviously that's what you do. How do you find the trend?
Great question, Kerry. And I agree with you. You have to be adept at both the technical and fundamental. And I think just doing your analysis, doing your research, and I actually have in my book my proprietary 5-step stock screen. I'm not saying just use the stock screen, but it's a good first step to figuring out if a stock is worthy of further investigation. Some people have just used the screen to make a lot of money, but others use it as a first step. And so those kinds of rules and screens can help you to figure out the trend. And once you have that trend, then the lucrative opportunities will definitely flow.
Okay. So, book, just tell us the name again and how do we get it?
So the 9 money rules millionaires use, only the unconventional ones, is currently available only at 9moneyrules.com or my website, joelsolomon.com. We're in pre-order stage. And that's also, if you want to just text 66866, you can also get it from there. Just text to 66866 9 money rules, and you'll get signed up. Right. So that's another way. And in just a few weeks, it'll be available on Amazon as well.
Excellent. All right. We'll keep an eye out for it. Have a link to your site in the show notes. As always, questions, comments, kl@kerrylutz.com, Twitter feed @KerryLutz, Facebook page, Financial Survival Network. Joel, thanks so much for coming back. Great to talk to you. Best of luck on the book.
Thanks so much, Kerry. Always a pleasure.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.